Hello, everyone. It's Kali Arevalo, editor of Institutional Investing in Infrastructure. Here with me is Jason Koenig, the co-founder and managing partner of ITE Management. We are just going to talk a little bit about how transport infrastructure is evolving, the next frontier of alternative investing. First and foremost, thank you, Jason, for joining me. I would love if you could just tell a little bit about yourself and ITE management to kick off, and then we'll sort of go into the discussion.
Great. Thanks, Callie. And thanks for having me. It's a pleasure to sit here and talk with you. So ITE Management stands for Industrial Transportation Equipment, and we view ourselves as the leading transportation and transportation infrastructure owner and operator um, globally. We manage over 350,000 assets. Those assets include rolling stock, chassis, trailers, containers. We call that intermodal. Uh, Commercial aviation, helicopters, jet engines, and also transloading and port facilities. So we get a great and tremendous view about everything that's going on in the world and everything that's going on as we move the shirt that you're wearing, the food that we're eating, even the screens that we're talking through. So it's actually quite a lot of fun. And most importantly, we get to play with, planes, trains, and automobiles, which is always a lot of fun. Um, we started this, by the way, not because we just want to play with toys, but when we started the firm about 15 years ago, at that time, the world was turning actually toward you in San Francisco. Everybody was looking at the new apps that were coming out and the new iPads. And we started turning our gaze toward the middle of the country. And what we saw were these fabulous assets, trains, trains and rail cars, the chassis and trailers. And we saw that they were fabulous because they generated a ton of cash. They were super durable. The results were super predictable, and they were super defensible. And we tried to buy them, and we couldn't figure out any way to buy them just personally or even invest as an institution. And we thought, well, if we like it, but we're having trouble buying these assets, then probably other people like it, and they're having trouble buying these assets. So we started ITE to create an institutional way for investors to gain exposure to what are really, truly fantastic, very predictable, low volatile assets with great cash flow streams.
Wow, no, that's a great way to put it. Thank you again for sort of joining me. It's great to have your background and expertise on this. So, jumping in, really, you have said the convergence of real assets, data, and innovation is sort of transforming the transport infrastructure landscape. I'm just wondering if you can explain how and what opportunities you're seeing for investors right now.
In seeing for investors within our broader space.
Yes,
Great,
and then transport infrastructure landscape, I'd say as a whole.
great. So I'd say generally speaking, right now we see there's two tentpoles driving growth, I would say globally. One is AI. We're clearly not an AI company. The other, I think, is mobility and infrastructure. And that is how we're moving things, what we're moving, what we're producing, and within North America and globally. So, so transportation infrastructure, and we think ITE is sitting like right at the forefront of that. Um, Supply chains became not just profitable and important, but now they're becoming strategic, right? So we start there. As we drill down a little bit further in our sector, we own and operate rolling stock, chassis, trailers, containers. We call that intermodal, commercial aviation, helicopters, jet engines, transloading important infrastructure. It's all critical assets to move everything around the country, the continent, the world. The great thing about it is we're in a pretty volatile time. For a variety of reasons. And what we're able to do and what we're able to focus on is just providing low volatility. And now we'll get to like what are we providing our investors? Just low volatile, very predictable cash flow tied to critical assets. At the end of the day, that's what we're doing, and that's the opportunity that we see and we continue to see.
That's great. Very well said, and thank you for kind of covering that on a high level. So how are technology, data, and connectivity, some of the things that we're hearing a lot about, particularly now, how are they coming into play when it comes to transport
Yeah,
assets?
it's a great question. So It's amazing to actually think about how far we've come from a technology and data point in such a short period of time. And and I think that we're using information and technology to make our assets and our performance and how we work with our counterparties more efficient. So I'll start that with the conclusion. Um, I think it's only last year that we really started talking about AI, and now it seems to be everywhere. And it was only 5 to 10 years ago where people started focusing on data, right? So we started collecting information and data about our assets when we first launched and about 15 years ago. And when we did that, nobody really appreciated or understood why we were asking for it or the importance of it. But what we can see is where our assets are moving, who's moving them, how they're moving them, how frequently they're moving, what they're moving. That gives us an enormous amount of information about a lot that's going on both with our assets at the micro level and within the economy at the global level. So I think about that in terms of three ways we use that information. The first is where's your asset? And while that may seem like table stakes, most people can't tell you. So now we know where our asset is. From there, we can figure out how to manage it better, how to service it better, where the customer is and what the customer needs for it. Now, the second then is like, how's your customer using it? And that allows us to manage and better understand how to maximize value both for us and for our customer. Is that customer using it a little or a lot? Do they need more? Do they need less? All of this is to help us in planning. And as we get bigger and bigger, and as we have more and more information, we can start using it to become predictive. And that's both predictive for usage and predictive for investments. So we view ourselves as a first mover in this space. It allowed us to grab a lot of information, and we have 350,000 assets that are giving us that information every day. And as we grow, it becomes a little bit of a virtuous cycle. So that's how we're using information today.
Yeah, it's certainly a different world than it used to be, right? We host a few events, in-person events, and we have the great we're at a good position in my role to talk to a lot of investors and a lot of professionals, and just kind of get a pulse on the market. One of our events, some industry professionals sort of called transport a silent winner alongside AI and digitalization, and I thought that was kind of an interesting assessment, So I just wanted to see what you thought of that. What do you make of that? Do you agree? Sort of where do you see that going?
Well, we agree with them, and we're gonna put them on our marketing materials. We think we actually call it a quiet compounder too, in the sense that we are constantly generating a recurring revenue stream and reinvesting it, and that's compounding and growing, and that's compounding and growing. So I think that what's going on a lot in the world over this past half decade for sure, and that continues to accelerate, are kind of I'd say four key changes. A lot of them will sound familiar to you, but 5 years ago, people weren't so sure. So the first was like our supply chains and our infrastructure were too prone to single points of failure, right? Remember in COVID, everyone was worried about running out of toilet paper. Um, the second thing is we've seen a decoupling away from China. I think there was a concern about deglobalization, but that's really proven to be more of a diversifier, right? It's a reglobalization. Hundreds of countries are vying to be part of that supply chain. We've seen onshoring is not new. It's been going on for quite a while, and that was always starting to accelerate and will continue to accelerate. I think there's a real view toward producing more and more closer and closer toward the consumer or the end user. And finally, we started seeing companies moving toward cheaper, safer sources of energy. So North America is a huge continent, right? Europe's a big place, Asia's a big place. You need great, efficient, cheap ways of moving all of this around. And so it's becoming more and more strategic from a geopolitical and from a resource point of view in North America. And from an operating and investment point of view, it's just predictable. It's needed. It's going to continue to grow as populations grow, as we produce more. So to your point, we agree. Like we think you can't move anything around without that transportation. And as we move more and more around, you're going to need more and more of it.
Yeah, no, that's very well put. Um, how are regional dynamics shaping investor appetite for alternative income and inflation protection?
It's a great question. So when we first looked at real assets about 15 years ago, we saw four or five key characteristics. The number one characteristic is cash. These assets deliver high cash flow because they're tied to long-term contracts. Think about it like your automobile lease. You have to pay no matter what. Um, so it's really predictable. The second thing is through the dynamics of the industry, they're correlated to inflation. And because of those first two items, they're actually not correlated to anything else within your portfolio. Finally, um, the assets are very tax efficient and a great downside protection. In many respects, we recover our principal investment during a first lease term, and we have 5 to 45 years, depending on the asset, to make incremental returns on it. In an incredibly, in a world with volatility, we view ourselves as an important part of any investment portfolio because we're that steady, rock solid part of it. We're as your stock market goes up, as the stock market goes down, as bond prices move around, we still need to move. Like you still need to buy clothes, you still need to eat, you still need to buy gifts for people. You're living in a house or an apartment or a condo. All of those items require our assets to move them to get them to where they are to get them to you. So we can provide that, continued low volatility, very durable, very predictable cash flow stream for investors.
Fabulous. Thank you. My last question for you, it might seem a little bit different than the others, but I just wanted to see if you had any thoughts. We are seeing retail investors increasingly trying to get into infrastructure. What does this signify about the asset class and its evolution as a whole?
I think it is a little, as finance, as there's a little more democratization of finance, I think it's a good outcome for investors. I think that retail investors are typically exposed to some what can be volatile investments in kind of public markets. And I think getting the opportunity to invest in in real assets and in infrastructure, gives them the benefit of that low volatility. And I think we're in an environment where you want to make sure you're protecting your investment, protecting your downside, and generating good, steady, strong returns. I do think though, like anything, you know, quality and who you're working with matters. And I think with the infrastructure assets and with transportation assets in particular, these are operating assets. So you got to keep that in mind. And you need to work with folks who understand the operations and how to move these assets day to day. So while you and I are sitting here, I'm in New York and you're in San Francisco, there's real people doing real jobs within ITE. Um, Not to say that you and I don't have real jobs, within ITE that are touching, moving, fixing, and understand these assets in a way that you can't do with a screen and a phone. So the operational focus really matters. So as investors think about that, they're going to have a lot of choices. And you just got to make sure they get the right information about why these investments perform the way they do and who manages them well.
Yeah, absolutely. I think that's a really good sort of way to round it out. Was there any other closing thoughts that you had for the transport sector in particular, or anything looking at the future of alternative investing?
Well, I think we're in an incredibly exciting time. I think from ITE's perspective, you know, last year was a year of companies understanding the changing environment and how to operate in it. And it created a little bit of pause as people kind of figured it out. And now, as they're slowly figuring out, it creates enormous opportunity to work with them and grow with them um, as they're starting to deploy more and our economy continues to grow. There's a great repositioning that I think could benefit us tremendously. And us, I mean, the folks within North America um, and investors within infrastructure and transportation. So from our point of view, we do think that the best opportunities are actually yet to come. And we think as one of the leaders and one of the first movers, in some respects, we're a quasi asset management firm, quasi strategic operating platform. We think we're incredibly well positioned to take advantage of it. So we're very excited for 2026 and beyond.
Well, thank you very much, Jason. It's been great to talk to you. I think this discussion was very well rounded. Lots of good insights from you. So, again, thank you for joining me. It's been a pleasure.
Thanks, Callie. It's a lot of fun. Thanks for having me.